All right, we are going live. So, today is July 30th, 2021. I hope you guys are doing really well. I don't know where in the world you are today, but it is boiling hot here in Vancouver, British Columbia. So that's fun, but hopefully where you are, it's not as bad. But yeah, so if I sweat a little bit on camera today, just excuse me for that. Today we're going to talk about a whole bunch of different things. A lot happened in the market today, a lot happened in the world or this week, but we're going to talk about Nikola because this is a story that was kind of bigger last year and is kind of coming full circle with the founder now under indictment. We're going to talk a little bit about Amazon earnings because Amazon just put out their earnings last night and the stock dropped 7%, which for any stock might not be a big deal, but when Amazon drops 7%, that's $100 to $150 billion of capital or value loss. So it's kind of a big deal. And then the other thing we're going to talk about is global supply chains, what's going on in China and Germany and why there's inflation because of problems with the supply chains. We're going to talk a little bit about the Fed, as we always do, and what's going on there because there were some statements at the FOMC this week. And then jumping into the Bitcoin news, we're going to talk a little bit about the big short squeeze that we had last week, how we've had, I think, 9 straight days of green on Bitcoin, which is the first time since 2015, how that all went down. And we're going to talk a little bit about this new infrastructure bill that's being proposed in the US that's going to treat the way that crypto is taxed a little bit differently and how they're using cryptocurrency in this new legislation through the IRS as a way to kind of pay for a lot of this new infrastructure stuff. Just a reminder, if you haven't already, give the video a like and feel free to comment or type in the chat. After this whole video, I'm open to taking any questions you might have about personal finance, stocks, or anything like that. Either you can do it in the live chat, or if you're watching this video and it's already been recorded, you can comment down below and I'll be able to answer any questions there as well. Another quick thing too is that I have opened up a Discord channel for fun. It's completely free, but if you want to stay in touch and talk about, stocks and personal finance and cryptocurrencies, or if you have any topics you'd like me to cover, it's a great way to stay in touch. I implore you guys to join that Discord. We'll kind of build a bit of a community from there and then, see where that goes. But it's a great way to keep in touch with you guys and really hear what you want to watch because this whole live show is not really for anyone aside from the people who are already subscribed to this channel. I'm not pushing this to kind of, try and get more people. It's for the people who kind of like the content I've been putting out regularly and want to learn more and kind of have a weekly update. So anything you want to see, message it in the Discord and yeah, we'll see how that turns out. But yeah, starting today, we're going to talk about Trevor Milton indicted by the SEC. So if you don't know the whole story of Nikola, essentially this was a company that went public via a SPAC, which is kind of like a blank check organization. And they took the company public, I believe, sometime in 2020, early 2020. This company had a huge rally, I think from like, $14 to 70 to 90. It was a really big deal for a little bit. And it reached a valuation of $20 billion. And their whole thing was essentially that they were competing with Tesla, hence the namesake Nikola, in creating electric vehicles and specifically electric trucks. So these were freighters, these were kind of like, Land Rover type of trucks. And they were making outrageous claims like these things were, able to drive themselves, they were using hydrogen fuel and all sorts of things. And it came to light later on through a few short reports and some more investigation that almost all of these claims of these vehicles working were false. And now, after the CEO had stepped down, after making a whole bunch of, statements about how this stuff was legit, he's now under investigation. I believe he was arrested. He's got a massive bond. But we're going to dive into this article here and kind of explore what this whole story is about and maybe try and kind of find a moral in here. Because I think in this market that has kind of been running amok and is really frothy, it attracts scammers. When you have 0% interest rates, when you can drop buzzwords here and there, people make crypto project here and marijuana project here, and it spills over to almost everywhere. It's not just crypto and marijuana. People are making fake electric car companies now, and that's essentially what Nikola is. So it's a story of, you can only go so far lying about your stuff when your company is expected to put out a real product. So yeah, just give me a second here. Whoop. So Nikola's founder was just charged with misleading investors. Nikola stock is dropping. Nikola founder and former CEO Trevor Milton was charged by federal prosecutors with making misleading and false statements to the company's investors. He's no longer affiliated with the company, but the stock is down anyways. Investors are going to have to deal with some legal uncertainty, like it or not. Actually surprising, I think when this announcement came out, the stock only dropped like 10%. And the fact that this company is still worth over $1 billion with no working product in sight is kind of interesting. The company is distancing itself from Trevor Milton. Obviously, they're trying to kind of get past that. But the basis of this entire thing was this 49-page document that kind of outlined that he was creating a scheme targeting individual, non-professional, and so-called retail investors by making false and misleading statements to the investing public through social media, television, print, and podcast interviews. Sounds like a lot of people these days. Milton, for his part, denied wrongdoing, says he's innocent, called the government a bunch of fraud, but I think all this stuff was kind of laid out pretty obviously by short reports. And that's what's really interesting here too, is if it wasn't for some of these companies, and you might not like these, short selling activists like Hindenburg if you're in the stock that they're, writing negative research reports about. But if they're not out there doing this investigative journalism, these scams can go on for potentially really long times. And so basically what happened in this entire case is they found a few things out about these trucks. They were claiming that these were all working prototypes, but in reality, they were taking these trucks, towing them to the tops of hills, and I've been working in the video production industry, so I know this stuff pretty well, changing the angle to make it look like it was running down a flat surface when the truck was really just rolling down a hill. Deck it out with lights and stuff, but these things were so far away from working prototypes that there were some obvious things to them as well. They didn't even have properly closing doors, so their doors were taped up from the inside to keep them going. And then when they brought the models onto the floor to kind of, show them off to investors at trade shows and things, they didn't even have functioning batteries and electronic systems. They were actually being powered through wall sockets. So this whole concept that these were these electric trucks and freighters that were running off of hydrogen fuel cells and were able to do these impossible ranges and stuff, they didn't have anything close to a working prototype. And yet, day in and day out, Trevor Milton was taking to Twitter, posting all sorts of things, calling these short reports frauds. Once you've seen one, you've seen them all. Usually what happens is a short report gets released, there's a bit of a rebuttal, but it doesn't really have any meat to it. And you learn to kind of spot what that is. It's more denial than like refuting any of the statements made. It's like, this does not, our cars are not this, or our cars are not that. It's not like, oh, we're going to actually explain how the technology works to refute your point about it being a fraud. So, yeah, anyways, a bit of justice being served. Released on a $100 million bond. It's important to realize, too, that Trevor Milton actually sold all of his stock at one point, and I think he cashed in on like $1 billion here. So, whatever he's getting sued for, I don't know what he's doing with his money, but I would say even after a lawsuit, it's not like he's going to be going broke anytime soon. He walked away like a bandit from this, and he's essentially just a marketer. And I don't know what the future is of Nikola. I know they tried to sign something with GM. I don't know if that whole thing was taken back, but I haven't heard anything significant out of this company in years or months. It feels like years. And yeah, well, there you go. A lot of people feel skeptical about electric car companies, and I would stay that course as well. I think Tesla had the same type of skepticism, but they ultimately, came through and proved that they had a working product. But it's not so easy to just come out of nowhere and design a car, and I think it's pretty obvious that the team from Nikola in the beginning didn't really have the engineering wherewithal to actually follow through on their promises. And, we'll see where it goes from here, but the range, the battery capacity, the charging speed, the power, I don't think any of these things are going to hold to the actual working prototypes or the working models when they actually get released. It's a lot of bluster and not much substance. Moving on to the next topic, let's talk about Amazon. So Amazon had earnings last night, and for the first time in, I believe, a few years, they actually did not meet revenue estimates. And that took the stock down quite severely. Companies on Wall Street usually set themselves up for success. So they're putting out these projections of what they think their revenue is going to be like for the next quarter, the next year, and they try and undercut them so that they're continuously beating their own estimates, and then they kind of set the bar for Wall Street analysts to have their own estimates as well. So it's kind of this pattern of like under-promise, over-deliver. And the big tech companies are really good at this. They really, you don't want to over-promise and under-deliver because the market is at this point right now where the expectations are sky high. So you need to continuously put out numbers that are impressing people and showing your company's resilience. So Amazon and other online retailers swoon on slower e-commerce growth. Amazon shares were heading for their worst trading day in more than a year Friday on the company's warning that its core e-commerce business is growing slower as COVID-19 vaccines become more widely available and more consumers return to brick and mortar stores. The news is also heavily weighing on shares of other e-commerce players. So Amazon was down about 6.8%, eBay down about the same, Etsy, Wayfair, Overstock, Stitch Fix, all of these kind of online retailers down a bit because the stats out of Amazon are showing that more people, as the reopening kind of happens in our economy, are just going back to traditional stores. The people who are forced to do e-commerce are, there's some stickiness to the buyers that were kind of transitioning into e-commerce during COVID-19, but some of them obviously don't want to do the online thing and they'd rather go to brick and mortar stores. One of the interesting things about this, and I didn't actually listen to the earnings call, is that Jeff Bezos has resigned as CEO from Amazon. I think he's a chairman of the board. And there's a new CEO, and he was the previous CEO of the Amazon Web Services, which was kind of the only section of Amazon which makes any money, and they host websites and do cloud infrastructure. Andy Jassy was made CEO of all of Amazon a couple months ago, I think last earnings. And despite this, he wasn't actually there for the earnings call to announce the financials. So I don't know if this is common with big tech, but typically when I've listened to earning calls, the CEO is almost always there with some word of advice going forward. So kind of weird that you have an earnings call where Jeff Bezos, the founder and the former CEO, and the current CEO are not a part of the call. So Amazon posted revenues that were in the middle of the company's guidance range, but short of street estimates. Revenue from online stores was about $53.2 billion. And so this is a really interesting statistic. I was reading online that apparently every single minute, if you break down this revenue number into a whole quarter worth of time, Amazon makes almost $1 million a minute. I think it's like $890,000 a minute that they're making, and that turns to something like a five-figure salary per second. It's a monster business, the likes of which we've never seen. Like e-commerce is just incredible. All these companies reporting 2-figure, 3 figures in the billions of dollars per quarter per year. But nonetheless, growth is what it's all about. They're only up about 16% in revenue from a year ago, 13% adjusted for currency, falling short of the street consensus of $57.3 billion. It was below the 41% growth in the previous quarter and 49% growth a year ago. So we also know that for e-commerce, summer is a bit of a slower time. There's not as many holidays for purchasing habits like there are later into the year. Amazon CFO Brian Olsavsky told analysts on a post-earnings conference call that the company's growth since mid-May, aside from the Prime Day sales event, had dropped into the mid-teens from the 35 to 40% range. The company sees growth for the September quarter in the 10 to 16% range. So that development overshadows strength in other parts of the business. Amazon Web Services and advertising sharply outperforming street estimates. And so these are much higher margin businesses. If you don't know how Amazon's business model works, their e-commerce stuff is not really that profitable because there's a lot of things involved in shipping and freight, and the margins on products just aren't that great, and they have a small take rate and all the returns that they have to deal with. The way that all that stuff is financed, the reason you're able to return anything you want on Amazon and get refunds is because their cloud business, which is AWS, and I think 30% of the internet is basically hosted through AWS. So they're running the servers for Netflix, they're running the bandwidth for all that stuff, every kind of major site you can think of. That stuff's extremely high margin, and now they have an advertising business as well, which is also super high margin as well. It's basically what Google and Facebook are into, and Amazon is getting into that space more aggressively as well. Just to wrap this one up, the analysts expressed some disappointment, and analysts have their target. Most analysts see the stock at around $4,000 as a target, but it's trading at about $3,300 today. Mahaney wrote that Amazon shares could be range-bound in the near term as investors debate whether the company can recover to 20% revenue growth in 2022, driven by the size of the market it serves, new growth initiatives, and the company's record. And yeah, a little bit odd that the current CEO and the former CEO were not on the earnings call, but I don't think that's a reflection of any sort of pandemonium with Amazon. But speaking of some problems with Amazon and the revenue and some of the profit margins, there are some big problems going on with the global supply chain. And so I don't run an e-commerce company. I'm lucky enough to have a service company that operates in Canada, but a lot of the people that I've spoken to in e-commerce that are doing Kickstarters are having this problem where they order their product and they're waiting months and weeks and months before they actually get it. Their prototypes are hung up, and the price of shipping has skyrocketed, and it's changed a lot of the ways that people are approaching the coming e-commerce season, which is about October to December. People's products are getting hung up, and this is a big problem for all the consumer seasons that are coming up. And I've heard about it a bit firsthand. I spoke yesterday with one of my friends and she was saying that basically she used to pay $1,000 for a freight delivery, and it's gone up to $7,000. And I've kind of thought, well, there has to be something driving this. The natural disaster, it can't just be inflation. And so digging into this a little bit more, there have been some massive floods in China and in Germany, and we're going to kind of dive into an article here that kind of summarizes a few of these things and what is going on with the supply chain, and answering some of the questions I had last week about the cost of, or maybe 2 weeks ago, about the cost of used cars going up so dramatically as well. So, a new worldwide wave of COVID-19, natural disasters in China and Germany, a cyber attack targeting key South African ports. Events have conspired to drive global supply chains towards a breaking point, threatening the fragile flow of raw materials, parts, and consumer goods, according to companies, economists, and shipping specialists. The Delta variant of the coronavirus has devastated parts of Asia and prompted many nations to cut off land access for sailors. That's left captains unable to rotate weary crews and about 100,000 seafarers stranded at sea beyond their stints, in a flashback to 2020 at the height of the lockdown. So this Delta variant is kind of changing the way that people are approaching basically, like workflows in the entire supply chain. I know in China, I don't know what the vaccination rate is there, but I believe it's a lot lower than kind of the other first world countries in North America, because their system of purging the virus was strictly based on these really militantly enforced lockdowns. And so they have their own vaccines as well, and other countries that have had a lot of success with these lockdowns, it seems, don't have a plan for the vaccines. So when things have started to open up and these countries have started to let a few people in, the vaccine and the Delta variant has kind of spread like wildfire. And so you're seeing a few countries like Australia and I think China and Germany, and now in the UK and in France, clamping down and saying, look, we're either going back to strict lockdowns or we're going to have a vaccine pass if you want to go out and have any sort of freedoms, which is not that great. But in terms of what it does with supply chain, basically what you have is you have all these vessels that are stranded in certain areas of the world and very little space on board for new containers to bring things. And this affects not only just consumer goods, but commodities as well. So given ship transports around 90% of the world's trade, the crew crisis is disrupting the supply of everything from oil and iron ore to food and electronics. German container line Hapag-Lloyd described the situation as extremely challenging. Vessel capacity is very tight, empty containers are scarce, and the operational situation at certain ports and terminals is not improving. We expect this to last probably into the fourth quarter, but it is very difficult to predict. Meanwhile, deadly floods in economic giants like China and Germany have further ruptured global supply lines that have had yet to recover from the first wave of the pandemic, compromising trillions of dollars of economic activity that rely on them. The Chinese flooding is curtailing the transport of coal from mining regions, and that is just as power plants need fuel to meet peak fuel demand. And then going on to what we were talking about a couple weeks ago, about used car prices going way up. Car manufacturers really rely on silicone and these semiconductor chips to build their new cars, for their GPS, for the tracking devices, for just the operation of the vehicles. And some of these halts in the supply chain of the shipping freights are bringing these parts over to certain countries and their plants, because a lot of car production is kind of done domestically, stops certain companies from producing enough cars. So yeah, that to me seems like the most realistic reason for why used car prices are going up. There's just not enough new cars as one element of it. But the industry has already been hit hard by global shortage of semiconductors this year from Asian suppliers. Earlier this year, the auto industry consensus was that chip supply crunch would ease in the second half of 2021, but now some senior executives say that it will continue into 2022. Especially these new electric cars, which have a pretty high demand right now, they absolutely rely on chipsets and all of these electronic components to function completely. And so if even one piece of the puzzle is missing, you can't fix the car up to standard, right? You can't do things like the AI tracking. You need things like the LiDAR sensors, you need the chip processing, you need video cards, you need RAM, you need all these things, and that's all semiconductors. inaction. And when the supply chain is disrupted, these things don't get made. Almost all semiconductor production, or a lot of it, is done in China. So to really finish these cars, even domestically, requires China to have their supply chain working as best as possible. And then latest here, we'll do a quick story here from the Fed. But for those who don't know, the FOMC is kind of the meeting of Fed chairmen to decide whether or not they're going to raise the base interest rate and kind of give a bit of an outlook on their view of the economy. And so the talk of the town when we were talking about last week was kind of this idea that they're just purchasing bonds, and that's what's really keeping this price down. They're kind of the buyer of last resort for bonds, and people are moving all their money into equities. And so the question that everyone has in their mind is like, when are they going to stop these bond purchases? Because they've been saying, look, when the economy is good, when unemployment is down, we'll stop doing this. We'll stop buying bonds and essentially propping up the equities market. Their statement, or Federal Chairman Jerome Powell's statement, basically said, look, we're not changing our course on this. We're going to keep buying bonds. We're not talking about tapering at all. Unemployment's still not really quite where we want it. And like I said, a lot of this is goalpost moving, so they can say this over and over and over, economy is just not quite where we want it to be. And, the news on this, basically, there was one thing, and that's kind of this idea about inflation. And so Jerome Powell and many people in the Federal Reserve and in the Treasury have said this inflation is transitory, which means it's temporary, which means 5 or 6% inflation is not here forever. We're not going into hyperinflation. This can be cooled down basically as soon as the economy comes back to normal and supply chains are working and the economy kind of unemployment goes down and all this. And I can probably believe that. I don't think that I don't know if inflation is going to spiral out of control. We're going to have Weimar Republic levels of inflation. This stuff's kept pretty much under key, and they can stop this if they wanted to, I guess. But the key point here is that transitory means nothing for the average consumer because, again, CPI measures goods that are able to be made for cheaper and cheaper and cheaper through technology. So many of the goods in CPI can just be made cheaper and cheaper through new production plants. And so all this new money going into the economy could just make things cheaper for us in average goods, whether it's milk or used cars or other types of things like that just benefit from new factories, new ports, and new shipping routes. But essentially, when it comes to transitory inflation, like I've said, wages and salaries are on the bottom of that pyramid. So whatever the inflation rate is, it's not going to bug you on a day-to-day basis, but it will go up in perpetuity almost forever. There's very little history since the 1970s of deflation. There hasn't been long periods of deflation where prices have kind of come down for everything, including assets, including goods, including wages. A lot of things are disconnected. We know the housing market is, flying sky high. The equities market is flying sky high. That's, a part of the Fed buying all these mortgage-backed securities instead of the banks. But transitory inflation kind of just means that, the rate of inflation might go down, but it's still going to be going up. It might not be exponential, but it will just continue on its linear path up. And we know that wages don't rise at that same rate. So whatever that is, my advice as always is put your money into assets, put your money into something that is on the upper echelon of that inflation rate. Whatever is rising at that upper end. Bitcoin has proved to be that. That's why I'm in it. Real estate is a big part of that too. Equities are a big part of that. So find those things in the upper echelon of the pyramid that benefit from inflation, tie yourself to those things, and then the reliance on the wages to go up and the salaries to go up isn't as severe. So moving on from this, we're going to talk a little bit about Bitcoin. So Bitcoin finally had some action. I was complaining about it last week. I was saying, look, we've had 2 months of just this sideways movement. It's time for something to happen. When price kind of gets to this tight range and there's no action, something has to happen. And so what happened last week is we broke under 30,000 at one point, but there were no sellers. And so we broke under 30,000. There was no one to sell. And then there wasn't a single piece of news that came out that kind of drove the price higher. A lot of people are saying, oh, well, there was this rumor that Amazon is going to take Bitcoin and make their own cryptocurrencies, and that's why the price went up. That had already happened when Bitcoin was at 37K, which is most of this recent run-up. What really happened, in my opinion, is a giant short squeeze because there's a lot of traders right now hedging the price of Bitcoin. There's a lot of people that were taking this range and accumulating Bitcoin, And those people that were bullish on Bitcoin were hedging their positions with derivative products. So they were essentially buying Bitcoin, throwing it in their cold wallet or whatever type of wallet, and then going on to FTX, Bybit, Binance, all these exchanges and shorting it. There's a percentage of naked shorts, but essentially what we had here is one of the biggest short squeezes in Bitcoin history, where you have right here on Bybit, more than 887,000 derivative traders had their positions liquidated, valued at over $1 billion. 92% of those positions were short. And basically, what you had is there's a price that you have to pay on a hourly or daily or weekly basis to borrow Bitcoin to short it through derivatives. And sometimes that rate can be positive and sometimes that rate can be negative. When Bitcoin is going up a lot, usually you can short and you actually get paid to short. But if a large chunk of the market is looking short, then when you're shorting the market, you actually have to pay quite high in fees. And so it's the opposite way around as well. So there's a lot of people that saw, look, Bitcoin's $29,000, but not only is it cheap, I can actually buy it and hold on to it and get paid interest because the derivative traders are shorting it so hard that the funding rate is at a certain place where longs basically get paid by the shorts. And so that's kind of flipped a little bit on its head. But just to show you some statistics from this, this chart here basically highlights in the red the interest rate for short. So if you were shorting anytime between June to about the end of July here and you were short, most likely you were paying an interest rate that was pretty high. So you were paying a daily rate or a weekly rate, or APY I think at one point reached about 60%. So if you had held your short position for a whole year, you would have paid about 60% just in fees for holding that position. So the daily rates were pretty high for shorts. And what that basically means is that shorts are not really that reluctant to keep doubling down if the funding rate is not in their favor. And essentially, you have all these people making bearish bets on Bitcoin. Bitcoin starts to rise. It breaks through critical resistances. I think I mentioned 36,500 was kind of a big one. Once that level broke, we went from 36.5 to 39.5 in about an hour. So you can see the volume pour in. We had 9 straight days of green, and a lot of that is just because all these short positions are forced to buy. And specifically what you can see too is that a lot of people on the way up for Bitcoin, they were shorting, they were using bearish bets on Bitcoin using stablecoins as collateral and increasing those numbers over the past 3 months. Leading up to May, traders were increasingly using Bitcoin as collateral to long Bitcoin. So they were using their Bitcoin as collateral to buy more Bitcoin. On the way down, they were using their stable coins, their US dollars that they had sold for Bitcoin. They were using that as collateral to short and thus having their positions liquidated when the price of Bitcoin went up. When you have Bitcoin as collateral and you use it to short Bitcoin, then your liquidation rate's not as bad because your collateral is gaining in value relative to your short position. But if you're doing it with stable coins, then the value of your collateral doesn't really change in relation to the price of Bitcoin. So you can get short squeezed a little bit easier as well. And not to mention, there's a few other stats. I don't have them right on the screen, but essentially a lot of people have been buying Bitcoin that are smaller players in the space. So people have been accumulating Bitcoin, between May 19th and July now for months. And so you've seen these really small entities purchasing Bitcoin on a daily revolving basis, just creeping up and up. New wallets, the amount in the new wallets just continue to increase. There are exchange outflows too. So a lot of money that was held on exchanges was just being taken off of it. And so you have thin supply, you have everyone thinking the crypto is going to go, Bitcoin's going to go down to 25K. Everyone's on one side of the coin, and it really just takes a couple players to squeeze all that sentiment out and reverse. And so Dan from the Chart Guys has this saying that the most violent trades are when you go from one extreme emotion to another. And I think we were hitting this point in crypto where everyone said, look, this shit's going down. It's going down to 25K, 20K or whatever. I'm either going to short it or I'm just going to set all my bids down there. And so what happens is everyone looks at one way, max fear. It takes a couple big players with some money to take advantage of that and turn it into max FOMO. And that's basically what we saw. We saw 9 days of going from this is a sinking ship to, oh my God, the bull run is back. And so now we're at this 40K region. I don't know what comes next, but my guess would say that if bulls want to prove anything, they have to get over 42.5. The most important price for me right now for bulls, and I know it might seem a little bit late to the game, is 42,500. And that's because on May 19th, which was that giant dump day where all the cryptocurrencies, had this giant collapse, Bitcoin hit 28 or 29K on most exchanges, and then bounced at the top of that bounce to 42.5K, and we've been stuck in that range now for 2 months. So essentially, the market needs some imperative to either add or remove more capital in order for things to really get moving. And so once Bitcoin goes above 42.5K, that's a green light for entities to say, look, we got to move things in. We're kind of out of this this Goblin Town zone. And if it breaks under 28K with conviction, that also tells people, look, maybe this is over for a few years. So 42.5K is key for me, 42,500 on Bitcoin, and we'll watch that with a keen eye over the next few weeks and months. But my guess is the macroeconomic picture is looking rosier and rosier by the day. More money printing, more need for a strong sovereign currency, the geopolitical stuff too. People are getting sick of these lockdowns, and trust in government is waning. And you don't need to have trust in Bitcoin. You just need to verify, and that's what makes it pretty solid. We're going to go over this next bit a little bit quick because I want to kind of wrap up a little bit earlier so I can get to your guys' questions. But there was a new infrastructure bill that included some little parts about cryptocurrencies in here, and it's really important to kind of look at this because it's a little bit problematic. So essentially, they're looking to do a $3.5 trillion infrastructure bill in the United States to fund new roads, bridges, all sorts of things, probably earmarked $1 billion things in there as well. And in order to do this, they think that they can raise $28 billion by raising taxes and kind of classifying cryptocurrencies a little bit differently. So the draft of the bill now defines digital assets as any digital representation of value recorded on a cryptographically secured distributed ledger. And it also includes decentralized exchanges and peer-to-peer marketplaces as definitions of brokers. And so what they're basically saying is, look, if you want to operate in the US, if you are allowing for any sort of exchange and you possess any sort of cryptocurrencies and you allow users to possess them, you have to report to the IRS. You have to report their full transaction history, and you have to report all sorts of provisions as to what is being held. And that essentially just means is that they're just treating anybody who handles cryptocurrencies as a broker. So whether you're a BlockFi that just does savings accounts, or you're a Uniswap, or you're even an NFT marketplace, the IRS is looking at you and saying you are now a brokerage like a Merrill Lynch or a Questrade, and you have to report to us, and you have that standard, which is a little bit crazy. I'm not going to go through the whole thing right now, but one of the best sources to follow on legal things when it comes to cryptocurrency is Jake Chervinsky here on Twitter. And he's essentially pointed out here all the problems with this. And what this means too is that miners who are possessing, billions of dollars of cryptocurrency on behalf of investors have to also comply with KYC for the IRS, which is nearly impossible. That means anybody who's invested in this company, they have to KYC as well. And so I don't know what the likelihood is of this mandate going through the halls of Congress, but he has a really good thread here breaking it all down. I'm not going to go over it, but I'll link it in the description down below. But essentially, if you are an American citizen and you're worried about this, it will, in the current form, if it gets enacted, crush a lot of the innovation in the crypto industry. We just came out of this long conversation about how China was essentially crushing innovation, and now the US is not really taking a progressive stance on this as well. And obviously, Elizabeth Warren is coming out and making up all this crap about cryptocurrency as well. So there's a real need for people who understand this stuff to go out and call their congressmen and senators to really get this stuff explained and talked about. But, my confidence is that there's a lot of money in the crypto space. They're building lobbyists. Eventually, I want to see a crypto hearing where we get, the Anthony Pomplianos and the Michael Saylors and the people who really understand this space, the Dan Helds, Jake Chervinsky's up there in Congress to explain this stuff to some of the tech literate or tech illiterate people up there. There are a few senators like Cynthia Loomis. I believe she's the senator for Wyoming, and she's a big Bitcoin advocate. There's a couple others, Pat Toomey. But it seems for the most part, a lot of the people, and not to get too political, on the left don't have a very solid understanding of cryptocurrencies, and they say things like, oh, it's just run by a bunch of shadowy super coders. Elizabeth Warren said that. So yeah, it's really good that I think more people get into Congress and there's more lobbying done. I'm not big on lobbyists, but lobbyists can also clear up a lot of things in the industry that are being taken the wrong way. I don't think there is an active team of people who are trying to lobby against crypto. I could be wrong on that. I think a lot of the misunderstanding and a lot of the fear and a lot of the misconceptions about crypto are not because there's a party pushing that agenda, but just because there's just a complete misunderstanding of cryptocurrency in the halls of Congress. And so hopefully this year we see that changed. But yeah, that is everything for today. No big theme to all of this, but things are progressing. But I just want to say to the audience, thank you so much for watching. We're going to do some questions and look at the live chat after this. But look, when it comes to news, it's like 90% of the headlines are sad, or they're depressing, or they're frustrating. And there's a whole bunch of things to be frustrated with. I think we're seeing now that governments are taking back the whole, once we get vaccinated, everything is over with COVID thing. And, we're going to vaccine passports and masks, even if you're vaccinated. And, what's the goalpost? It keeps moving. The government's moving the goalposts for when the pandemic is over. The Fed is moving the goalposts for when QE is over. And it feels like things are a little bit directionless. And some people say, well, no, there is a direction. It's a grand conspiracy. They want control over our lives and surveillance. And maybe that has some truth to it. But, right now, it's still very possible to be a sovereign individual. And that is, through freeing yourself from inflation by investing in assets as much as possible and using your free time to understand them. But it's also in equipping yourself with skills and working on things like your personal health. And I've tried to do this over the last few days and weeks. I've been trying to go to the gym a little bit more, get a bit more healthy, cut sugars out of my diet. It's kind of tricky to do that one. But there's a lot of things that you can do on an individual level, and you can share that with your community to kind of hedge against all this madness in the world. You got a healthy mind, a healthy body, healthy possessions. Whatever the political establishment decides to do on you, you can equip yourself. And the real hedge is not betting one way or another in the market. The real hedge is yourself and protecting yourself as a sovereign individual by just improving yourself in any way possible. So yeah, that's my message for the week. And now we'll dive into the live chat. Oh wow, we have a lot of viewers today, 18 people, that's awesome. Denny and Makiko. All right, if you guys have any questions, I know there's 18 of you guys still watching. That's awesome. I love to see that. I think when we started this, it was like 7 people, and now it's up to 18, which is great. I don't have any crypto to give away this week. I didn't think of a question, but you guys don't need it anyways. But we'll go to one thing here. If you guys want to chime in, I had a commenter comment on one of my videos, and it was basically it was that one about the solar powered cabin and all that. I think people like that stuff, but this was his comment here, and I'll share the screen. He made it publicly, so I feel like I'm okay to kind of ask it out here. So this is what he was saying. He was saying, I'll move my face here a little bit. He was saying, I have a bit over $750,000 in cash from selling a house I owned with my dad. But the funny thing is, I thought I would end up with more. I can only get $200,000 in financing, so I'm so torn on what to do. And this is someone who lives in Vancouver, Lower Mainland. I want to buy a SFH, which is a single family detached house in the Lower Mainland, but it appears I can only manage on the island. I don't like small cities. I'm terrified if I leave Vancouver, I will just miss it too much. I've thought about condos and townhomes endlessly over the years, but I think they are even more overpriced than single-family homes. There's exorbitant fees and levies and strata nightmares. I'd so appreciate your advice. I want to make the most smart investment, but I literally could not have less knowledge on stocks and crypto. What would you do in my position? I saw your video when you posted on Reddit. I keep thinking maybe this guy knows what the hell I should do. LOL. So yeah, this is a really good question. I think a lot of people are in this situation where you kind of just wake up to a whole bunch of capital, and it's like, what do I do with this money? Where do I put it first? And it's like, you're in this panic state, and I think that gets exacerbated by all of this inflation story going on. It's like, okay, I have $750,000. If I don't move this next year, then if inflation is 5%, then my purchasing value has gone down $35K in a year. I don't want to fear monger, but that's essentially kind of the sentiment this guy might be worried about. And so I don't know, my thesis on real estate's a little bit different. Like, I live in Vancouver, and it's something where even if I had the capital to buy a single family home or a condo, even without financing, without having to rely on a mortgage, I don't think I would do it. You can lock that capital up for a really long time. And this is my thing with real estate, is like, the barrier of entry to real estate is extremely high, and a lot of people say, well, the good part is you can leverage it really easily. Like if you have a good job, you can get loans and you can put 40K down and get a 400K apartment, and like what other financial medium can you do that with and have that debt kind of secured by the bank and also have a place to live out of it? So I get the thesis on real estate investing. For me, it's just not that interesting. I think there's better rates of returns if you just do a little bit of research. I know the risk is a bit higher and maybe you're not owning, a bearer instrument in that case. But, for me, real estate is just like a house over your head. And then especially when it comes to apartments and condos, like what do you really own, right? Like you don't pay your strata fees, they can take it from you. There's eminent domain rules as well. And, I don't know. It depends on how much you trust the government, but when it comes to eminent domain, that's the government saying we can buy your property out at fair market value to build whatever we want to build. My take is that they will do it if they see it necessary. So I don't know. When it comes to real estate, I'm skeptical on it. I don't like the idea of getting into debt if it's not necessary, but imagine if you're buying a condo or an apartment and you're living in it, it might not be too terrible where what the rates are right now. One of the challenging things is, though, in Canada, I don't believe we can get fixed rates for over 10 years. And my guess would be at some point, the rates might go up. So you don't want to be tied into something that can have the cost of capital every month go up dramatically on kind of like a whim. I have a thesis that rates will never go up, but that doesn't necessarily mean that mortgages for houses, those rates will never go up. The Fed might keep their rates at 0 or 0.25 or 2.5 or whatever, but banks collectively can decide to raise rates. So that's that. Tips for Jim, Jeremy Either and Jeff Nippard. Yeah, I've been watching. The thing is, like, as soon as you look up stuff about workouts, your entire feed becomes workout videos. And so I have a separate account that I go on when I'm just curious about random topics, because I hate my YouTube not being the stuff that I regularly watch. So yeah, money is worthless. What do you think about interest yielding accounts like BlockFi or Celsius? Will you be doing video on the Celsius network? I think I will be doing a video on the Celsius network at some point, because I wanted to dive a little bit more into that. There is kind of this war of factions between the BlockFi people and the Celsius people. Some people think Celsius is not as insured. It's not as, comparable when it comes to, I guess, being a secure. But I think now it's pretty obvious that BlockFi also has entered unknown territory with the legality of what they're doing. My thing is this: there has to be a certain payout that you're willing to accept for letting someone hold your Bitcoin. Your Bitcoin is this sovereign thing that you have full control over. That's kind of the killer feature. So if you are going to go to the step of lending it out to someone, they better be giving you a really good return on that. And so BlockFi nowadays, I think, is giving, if you have more than a quarter of a Bitcoin, which is really only about $10,000, more than $10,000 worth of Bitcoin with BlockFi, they're giving you 1.5%, which is on par with a bonus boosted savings rate at a bank. It's just like, I'm not going to do that, and I lose possession because none of this stuff is really that insured, unlike a bank. It's just not worth it for me. For me, I got to get at least 4.5 to 6% minimum on my assets to make it worth staying on these platforms. And so for me personally, this is just my strategy. When those rates drop under 4%, I just take it and I just put it back into my ledger, and it's like, I'm not getting yield on it, fine, but the risk of any of those platforms going down is not worth the yield at that moment. So I'm not I'm not keen on BlockFi right now. I have moved almost all of my assets onto Celsius for the yield, but I've also moved a lot of my assets onto cold wallets, as I just don't think it's worth stressing over these platforms. The other big problem too, and I haven't done withdrawals off of Celsius, but BlockFi, every time I want to withdraw off of BlockFi, they make me a KYC, and it's just like, I've done this 20 times. It's me, you can verify my IP. Why do you have to get me to take a picture of my ID every single time? Have me do 2FA, email, phone number, and that's as good enough of a signal as you need. But every time I get flagged and they want me to take a picture of my ID and my face, and it's just like, I'm done. This is such a hassle. And even when you do that, you don't get your withdrawal immediately. You still gotta wait 1 to 2 business days. So BlockFi can suck my crack. That's all I have to say about that. But yeah, we're gonna tune out here. You probably can't see my face that big, but right now I'm in full screen. It's hot as hell in here. It's 32 degrees. So I'm gonna go probably jump in the shower. But yeah, don't forget to join the Discord. It's in the description below, I think, and I'll link some of the Jake Chervinsky Twitter there because it's a really good thread. Join the Discord if you want to stay in touch, if you have any topics you want me to cover. And look forward next week. I hope to get it out Thursday. I'm doing a big breakdown on all of the Bitcoin miners. And so I've been thinking about this video for a while, and I didn't think it'd be that interesting to most people. But one of the things that makes Bitcoin miners kind of different from any other sort of commodity, I guess, driller or miner, or whether it's an oil miner or a gold miner, is that they keep that Bitcoin for a really long time, and sometimes they never sell it. So companies like Hut 8 and Mara, every Bitcoin that they mine, they keep it, and then if they want to finance or expand their business, they just borrow against it. And so this level of conviction in the thing that you're producing essentially is so high with Bitcoin miners, and it should give you more conviction in Bitcoin itself, but it also is an interesting business model. And so we're going to go over that. My thesis is, I used to be on the fence about this, but my thesis is that investing in Bitcoin miners will get you a better return in a bull market cycle than investing in straight Bitcoin. And I think if you do your due diligence and you find the right companies, that they're also just as safe as a bet, because they're public companies, they're reporting companies, they got to report their holdings and their business model and all that stuff. There might be some scams out there, but Bitcoin mining is extremely transparent. You can find all these miners on the blockchain and what they're doing and what their returns are. And yeah, they might be really good investments contrary to Bitcoin. If you have people who are older in your family, you don't want to sign up on Coinbase or hold Bitcoin on their behalf, but they have a Quest trade, get them in on these Bitcoin miners. I'll do the whole video on that next week. And yeah, it should be really enlightening and interesting, and hopefully you guys will get something out of that as well. But yeah, thanks so much for watching. I always appreciate you guys tuning in. Every week it seems to get more fun and interactive, and I hope to continue that path. So yeah, take care. Have a fantastic weekend. If you are in Vancouver or the Lower Mainland, I will be at the Chart Guys meetup happening later this week as well, and you can say hi. So yeah, take care and see you.